Majority of the instruments traded in money market are short term, majorly financial institution. So capital market deals with medium term and long term instruments. For a shorter fund requirement, money market is the place. For a medium and long term, capital market. Majority of instruments dealt is commercial paper, treasury bill in money market. Here it's shares, debentures, bonds, security, government securities, treasury bills, etc. Indian financial market is subdivided into two segments. Okay, one is money market and second one is capital market. Now, how they have divided? I mentioned to you, there are so many options available in the market like short term, long term, medium term. Okay, money market is dealing with all shorter term. Now, who are the players dealing in money market? Majorly financial institutions. So that is where you people will not be dealing much. As a intermediary, if you join a bank, probably you will not be doing much there, very, very small. But as an investor, you will be doing it in certain instruments of money market. Second is capital market. Okay, money market, normally people will be investing for running their show. Now you would have seen treasury bills. Why treasury bills? Who accept treasury bill? The government, Kerala government or India government or Karnataka government, Tamil Nadu government, for running their show on a month-on-month basis. If they have not collected the, see what happens? Your tax collection will happen in certain period. During that period, if they wanted to invest, they need some money. So they will be raising a treasury bill, which will be 91 days or something. Within that 91 days, their tax collection will come so that they can repay all your money collected. So it's a short term. So in the money market, there are certain instruments which are lesser than 1 year duration. Capital market deals with instruments above 1 year, even less than 1 year is also there. But most of the people prefer capital market for a mid-term and a long-term investment. It deals with the capital enhancement of the company. When I start a company, I need to pay money to create company assets, etc. That is where capital is getting included. As I explained in the BygC, in some places I will take money from Amal as equity, and I'll take money and I'll give equity share. In certain cases, I will only give a bond or a debenture certificate. That's what we are going to discuss now. What are the primary market items? IPO, shares. I told you, in the capital market, we deal with shares, bonds, debentures. Those are the examples. Now we are segregating that. Okay. So capital market deals with medium term and long term instruments. There are primary market and secondary market. Now, what is primary market? I'm giving example of BygC. As I told you, now the shares are only with 3 people, right? I will take the same example. Now, what is book building? First is book building. I need to build certain amount and I am taking money within that company. Okay? Don't distribute it much to people. This is called book building. Now, what private placement? Private placement is something like this. I am asking Amal, I am asking Shivakrishna, I am asking Reddy, Divya, etc. Can you pay me money? These are the terms. If you'll give me minimum amount, I am looking at 1 lakh. Okay, maximum you can put whatever amount. But the total sum we are expecting is only 5 crores. But in the private placement, there are certain limitations that you can write it down. Private placement, you can run only once in a year. In a year, you can't have multiple private placements. Once in a year, you can do. And per private placement, maximum applicants can be or people can be involved is 200 people. So if I am wanting 5 crore, I can divide among 200 people, but I can't sell this to 1,000 people. So private placement can be given it to my company can take money from 200 people only if I am going through the private placement. Now take the IPO. IPO means I only need to fix the rate. I can go to N number of people. There is no number restriction. Are you clear now? Book building is called same company. I am not liquidating my shares or not giving. I am only taking money. Private placement, that is where maximum number of people can be from money can be availed is 200. For instance, IPO, there is no number restriction, but the price band has to be fixed. Now, if you go to Google and search recent IPO, you will be able to understand. Every company would have written there, my company is going for IPO from this period to this period. So whoever is interested, they can apply for my share. Okay. Now here also in private placement, I will give you the example of BygC. What I will tell you, all of you can invest. You can invest minimum 5 lakhs. I am keeping a tab here. And I will pay you annually 10% interest. Okay. That is private placement. But can I go beyond 200 numbers? If 250 people are applying, I can't take. I can take only 200. Okay. Same way BygC is coming into IPO. BygC is telling, I will put in an ad. Before that, there are so many regulatory requirements. I have to apply to SEBI. I have to get to stock market, etc. I have to clear. But in the paper, I can publish. BygC is going for an IPO. The price band kept is from 310 rupees to 350. Now I mentioned to you, there is a premium or an additional expenditure I will tell you what. Every company now, BygC, even though we have started, say 100 rupee is the capital. As I told you, 33.13 or I have taken 40%. My other 2 colleagues have taken 30. So 100 rupees we have. So 40% share is mine, 30% is the other person, 30% is the third person. If I'll calculate now after 5 years, first year when we issue the share, I will get 40 shares. The other 2 will get 30. And what will be the share price? 1. You remember 100 rupee invested, 40 share means price of each share is 1 rupee. Correct? No? Today, after 5 years, the chartered accountant will calculate and give from our profit, from our trading. Okay. The profits as well as the book would have grown in the last 5 years. The order book, the turnover, etc. calculate, they will arrive at a notional share price. So as I said, when we started the company, the share price was 1 rupee. Today, it would have grown to 7 rupees. So whatever I have invested 40 rupee, how much it would have grown now? It would have grown to 280. That is my profit. And now we are going for liquidating our company. How the IPO will happen? I will tell from my 40 shares, I am selling 10 shares. The other 2 will tell 30 shares, we are selling 10. So all put together, 30 shares are trading in the market. Currently, what is the rate I said? 7 rupees. 1 rupee has gone to 7 rupees. So what is that we are expecting? 30 into 7, 210 rupees we should get. Then my shareholding will come down to 30. The other 2 shareholding will come down to 20 each. Now the remaining, how much it will be? 30%. Whose will be that? That is with the public. You people are buying, then you will become a shareholder of BygC. You understood? This is how IPO happens. Now, when I list my shares, I will not be selling for 7 rupee. I have a goodwill. I know it is a all India company. So what I will do, I will add a premium to that 7 rupee. So what I will tell, if you need to buy my share, you need to pay 7 plus 100 rupee. So if anybody wanted to buy my shares, 1 share will be costing 107 rupees. Are you clear? This is what happens in the IPO. Now, recent IPOs are coming. Now, tomorrow onwards, you should start checking in the paper also. Whenever IPOs coming, they will tell price band, some 107 to 110. Share value this much, premium this much. They would have written. Okay, share value is the notional value created by the company in the so many years, and then premium. In some company, what they do, they will keep that fixed. So I can keep 1 rupee fixed and I can add 106 rupee as premium also. stock face value plus premium added, that is what it is listed as the listing price in the market. Hear about this? So IPO is for a large number of people. So anybody, if I have an investable surplus, I have 1 lakh, and in the share value they are quoting 10 rupee share value, 90 rupee premium, so 100 rupees is a share value which they are asking. I will buy 100 shares. How much I need to pay? 100 into 100, 10,000 rupees I will invest. Then once I'll get the share, I will be eligible to get that, and if BygC company is making a profit and announcing dividend. Otherwise, it will be listed in the market, and that is called the secondary market. So first BygC is listing in the market, that is IPO. Now all of you got 100 shares, 20 shares. Tomorrow you are seeing there is a trading happening. I am again selling 5% of my share, but I will not be selling for 107. I will be selling for 120. Just imagine you bought the share for 107. Within 1 month, you are getting 13 rupee extra on your 107. So you also will send, you will get that 13% profit. And this trade happens in the secondary market. Okay. So primary market, whenever the company is selling their shares, selling their company shares through an initial public offering or a private placement. Whatever happens after that, first buying. So BygC now will be doing an initial public offering or a private placement. Once you get the BygC share, then you will be trading in the secondary market. Now, what are the instruments used in the secondary market? One is equity shares, company equity shares. Then, as I said, debt. Then commodity, gold, silver, etc. are getting traded in the market. And futures and options. Non-security items are called provident funds, public provident fund, fixed deposit with banks, etc. Those are the non-securities instruments. Now, securities market, as I said, initial public offer will happen with all companies. Once they get listed, it is getting listed in the share market. So there are different intermediaries available here. It is called, one, you need to know secondary market or security market. One is the depository. You will learn about that. Depository. Second one is the stock market. Third one is the broker who does the deal for you. So the securities market consists of what? Depository, broker, stock market. And there is a person regulating all this. It is called the regulator. Now for stock market, the regulator is SEBI, Securities Exchange Board of India. Similar to the banking. Banking, who is the regulator? So similar to RBI, in the stock market, SEBI is the regulator. Now what are the essentials in the securities market? Okay. Just like entrepreneurs like BygC. Now, as I said, if I'll go to any bank for getting funds, bank may not be interested. Even though we worked in HDFC bank for quite some time, if I'll go to HDFC, they will say, sir, we can't give you now. You started showing big profits, then we will give you. So what is an option? I can take the route of IPO, stock market. I can list my shares in the market. Or if I know some good people ready to invest, I can place my shares through private placement. So these are the points available. So if I am looking for a 10 crore investment, I can ask some 200 people to invest 10 crores to us. Then we will be providing them a document stating that now you get a share of this. Or I can go to an IPO wherein I can list my share in the market. Okay. But private placement, there is a problem. There is a period restriction. You can't just move out from there immediately. There will be a 2-year lock-in or 3-year lock-in, etc. Because otherwise I'll have a problem. No. If I'll take money and tomorrow Amal is coming and telling, sir, you give me my 20 lakhs back. Company will not have funds to give at that point of time. That is why it has a fixed period. But in the stock market, secondary market, there is no fixed. You can sell as and when you require. Only thing is the market will be available. Now today being a holiday, markets are closed. Today I can't do a transaction. But whenever the markets are open, morning to evening, during the market hours, I can sell or buy the shares as per my requirement, which happens in the second week. As I said, there are regulators which you need to know, especially the stock markets are main stock markets in India, which deals in equity market is NSE, National Stock Exchange. Second is BSE, Bombay Stock Exchange. Bombay Stock Exchange is the oldest stock exchange, which is created by a lot of brokers. NSE is created by the government itself, National Securities Exchange. Okay, both of them are under the umbrella of SEBI. Now the other ones I have written here, MCS, NCDX, ICX, they regulate the commodity market. Those are the stock exchanges for commodity like wheat, dhania, gold, silver, crude oil, etc. Okay, just to know about that, I have listed here. Now these are some items you probably will not require now. As I told, there is a derivative market. Now I don't know how many of you know. In your village, earlier, people will come during this day. You will have mango tree, it would have already flowered. So the mango buyer, he will be coming to your ancestral house and ask, sir, will you sell your mangoes to me? At that point of time, there will not be any mango, only flowers were there. You understood? He is thinking about the future because most of the people at that point, they were aware the quality of flowering, the quantity of flower, and the climate, etc. They will be able to predict. It's on an assumption basis. So what they will do, I will buy all your mangoes for 1,000 rupees. And they will give you some 100 rupee advance. And they will tell, I'll come once the mangoes are proper enough to pluck. Nobody else is allowed to touch. Not even the household people are allowed to touch any mango. Okay? So this transaction, it is not buying a mango from the market. You understood? No, he is not buying a mango. He is buying the entire tree, thinking of a future product. This is called future transaction or derivative. So the transaction happens between the parties on a future asset. Are you getting the point? That's why I mentioned that example. That happens in equity market also. The price is fixed now, okay? And they are paying a small amount as token. It is called premium in the derivative market. It is a huge market in world. Big traders are operating here. Just imagine the jewelers, they buy gold in bulk. What happens if they buy some 50 kilo gold? Suddenly the gold price falls and the fall is so deep, they are not able to withstand the pressure. Because just imagine 100 rupee, they bought it. Within 1 week, it has come down to 70. Do you think they will be able to make any profit? So how will they manage? As soon as they buy 70 kg here, they will buy or they will sell 70 kilo in the hedge market. Reverse transaction. So if price is coming down here, the other ways, he will be making a profit. So end to end, there is a no loss, no profit situation. That is called hedging. You must have heard a name called hedging. It is not for making profit. It is for what? To mitigate the risk. You understand? Word risk. And in the derivative market, everybody doing the derivative transaction to mitigate their risk. This is the synopsis, whatever we have discussed. There is a definite time period for an investment. For a shorter fund requirement, money market is the place. For a medium and long-term capital market, majority of instruments dealt is commercial paper, treasury bill in money market. Here it's shares, debentures, bonds, security, government securities, treasury bills, etc. Government securities, etc. Participants, money market, majorly the banks, tip companies, NBFCs, etc. Capital market, stock market, brokers, mutual fund, financial institutions, all these people. And regulator for money markets is RBI. Capital market is SEBI.